What do the tariffs mean for interest rates? Tariff talk is everywhere, and whatever side you're on, the financial impact will be seen. The immediate reaction in the stock market has been rough, and typically, investors will move money out of more volatile markets like stocks and into more secure investments like bonds and treasuries. When bonds and treasuries values improve, rates improve. And that is what we have seen so far. Now, that trend will continue as investments into those areas continue as well. So far, tariffs have actually been good for interest rates. How long will this continue? Well, that remains to be seen, and we've already seen a lot of volatility and fluctuation in a short period of time. My advice would be, if you get to a point where there's an interest rate you like and you want to take advantage on, be quick to move because we just don't know how long that will last. Rocket companies purchase Mr. Cooper, a servicing giant, for a record $9.4 billion. Mr. Cooper has a current servicing portfolio of over $2.1 trillion in loan volume, with over 10 million loans being serviced. And after the acquisition, Rocket will service 1 in 6 current mortgage loans. My initial reaction is Rocket is making a big bet on lower interest rates and using that servicing portfolio to have an opportunity to market for an upcoming refinance market. So that begs the question, is it better to refinance with your mortgage servicer? And is there even an actual advantage? The short answer is no. In most cases, if you're doing a loan that's purchased by, say, Mr. Cooper or Rocket, what actual advantage did they have knowing that they didn't do your actual loan to start? They would still require you to go through the normal application process, facilitate your documents, and get approved for your refinance just like any other lender would. They may say that there's a distinct advantage with being able to take your existing escrow account and transfer that to your new loan. In most cases, what they won't tell you is that you can do that anyways if you call and ask the current servicer to apply that towards your principal balance when you refinance with someone else. And in many cases, you might want to utilize that escrow. And in many cases, a borrower might decide to utilize those few $1,000s in escrow funds for something else and just build escrows into their new loan. A servicing company loan officer, from my experience, has been underexperienced and not service level focused. When it comes to refinancing, you should focus more on who can offer you the best terms, the best client experience, and someone you can trust. Idaho has passed a new law regarding trigger leads and requiring them to disclose that they have no affiliation with the previous lender and that the data was purchased from a credit agency. A trigger lead occurs when someone applying for a mortgage has their credit run and then their data gets sold to multiple other lenders purchasing that. And I've had this experience where multiple clients have called me and told me that these other lenders have called, misrepresented themselves as being either me or someone on my team or having an affiliation with me. And really, it's confusing and it's misleading to the consumer. I personally would be in favor of banning trigger leads completely, but I will say this is a major step in improvement towards consumer protection and communication around what they actually are. So good work for Idaho. Texas has passed similar measure in December, and more states have something in the works. Hopefully this information gets out to those lenders who are relying on deception for their business, and there's more information to protect consumers.